was just turning on my mic for exactly that reason.
Tell him,
She's on it now.
it's funny because
I've
I
got a reminder
always
on my computer that
uh,
says remind me to record.
yeah. Well, what I like to get like a little bit of a chat going first, while I'm waiting for people to join, and then it always leads into like important stuff quite early on. So and then I forget. So obviously, I
Yeah.
mean, you'll know this anyway, Tom. But like for other people that maybe don't, is obviously
Yeah.
I'm going to repeat the question so people watching back know what we say. So basically, Tom asked what creates
Yeah.
my 4 hour point of interest for me
Wonderful.
4 hour 15-1 strategy. So I always mark my zones from like the swing low up until the creation of some imbalance. So obviously, it's a 4 hour point of interest. It's obviously from this point here we get imbalance above there, then we get
Yeah.
imbalance. So that'll extend. There you go. So how I believe that all like why my understanding and explanation for why I would mark it like that is because I mean obviously I could jump down on the lower time frame and we could reduce this slightly, but what what I'm looking
Yeah.
for is in all the I'm just going to change to the 15 just so we see more candles basically. What I'm saying is obviously if this is a 4 hour low and it does because we know obviously this is in the past, I'm basically saying anywhere obviously all these candles get covered by this little pullback or whatever, but anything that's not filled up until the creation of imbalance, so obviously the
Yeah.
imbalance here on the 4 hour, there's something that goes on in all of this price action
Yeah.
until the moment that an imbalance is created. So an imbalance is a large injection of money into the market. So basically what we're trying to do is because imbalance is not I mean it is natural because obviously it happens and it happens because of a big injection in money, but the market doesn't like imbalance because here there is there's so many buy orders, there's no sell orders. And because we need sell orders for every buy order, we tend to come back to fill the imbalance. And obviously at the end of every imbalance is an order block. So my 4 hour points of interest are, like I say, from the wick low to the creation of imbalance. But that's my 4 hour point
Okay.
of interest, so it's slightly higher on there.
Okay.
So
Yeah. That explains it then. So it's
yeah,
the low to the creation of imbalance, and
to
that's
the
your point.
creation because at any point in this the order can go in, but until we hit until I mean the order could go in like 5 or 6 different dribs and drabs. So which I believe it does, which is why until we get the clear one that's you know does the business, then that's what price is generally coming for when there's a clear because if so like if it goes in 4 or 5 different dribs and drabs of big orders,
Yep.
the first three might not actually outweigh the sell orders. So
Yep.
it's there's like if you imagine a scale, like the point in time in which it tips in their favor, that's generally what they're coming back for because that's where they need the opposing orders for the balancing of the books, which is why I call it imbalance because it's the point in which obviously in this occasion the buys far outweigh the sells. So that's the theory behind imbalance and why I would how I mark my order blocks like I do. So I know obviously I know other people would mark it slightly different, but that's what makes sense to me is then that's the point what I believe they're
Yep.
coming back for. So with my 4:15 obviously, the drawings above. Like I say I will be creating more of these like screenshot things to trying to help everyone visualize it a bit better. So obviously you see the red structure line is what I class as 4 hour, orange 15, and then inside that is the one. So I haven't added the 1 minute to this sort of structure going on here because I feel it would take away visually a lot of
Yep.
what you would sort of see sort of thing. But in reality, if you see this 15-minute pullback here that I've got marked,
Yep.
there's a green line which is what I would consider the 1 minute, which I'll come down and show you that on the actual price chart with candles. But effectively, there'd be, if it wasn't so messy, I would have added green zigzags all the way up and down these as
Yeah.
well. But here's it's too much. So, and we're only really looking for it after we've turned bullish again on the 15, because obviously the 4 hours bullish, the 15 minutes overall bullish but pulled back, obviously because the 4 hours bullish still, and then the 15-minute turns bullish, and then we're just waiting until it comes back, fills an imbalance again, waiting for the 1 minute to turn bullish, and then obviously it goes. And in theory, that if once we turn 15-minute bullish here again, we'll literally just want in an imbalance filled 1 minute to turn bullish again. And then if we've got the right imbalance on this last after the 15 and after the 15-minute imbalance fill, if it's the right one, this is like the lowest the market should come back before it then goes and makes a new 4 hour high.
Yeah.
So
So you've come to your point of interest. You've hit your 50. You're on your 50-minute chart there, waiting for that to switch to
yeah,
bullish, for example. Then you wait for that, obviously, your 15 minute to break
yeah,
structure. And
yeah,
then on the 1 minute, then you're waiting for a pullback into
yeah,
an imbalance.
yeah,
And then you're waiting for the 1 minute to switch
yeah, yeah,
bullish. And then you're finding the imbalance on that 1 minute leg that
yeah,
caused the break
yeah,
on the 1 minute. That's your entry.
yeah.
And you'll go down to your seconds.
It took me seconds for a nice tight entry, and obviously you
Yeah.
see there's like a little thingy in here. So obviously from the image I just showed you, it's downtrending. I actually did this drawing up here, and then I was like, right, I need to go find a chart that's got that set up, because I've got somewhere like it's 4 hour downtrending. Let me just recheck this. We could be 4 hour downtrending, and this break could be a reversal break, do you know? So
Yeah.
um it would still be like that actually, but would there be like a leg up here or something? Yeah, so obviously the 4 hour could be downtrending, and then this could be a reversal, but on the one below it's just a continuation. So, but the point is that it takes a high, a previous high. So what it does before this is sort of irrelevant, as long as, like I say, you've had the breaker structure on the higher time frame that we're after. So as you see here, there's a 15-minute break, and then it comes back 1 minute. So I just want to show you that on this chart as well, because obviously I don't want people to think that it's just made up and it's not
Yeah.
like playable in a real life situation. So obviously this is the 15-minute break here, close above it. From that point there, we should have a 15-minute zone to mark, which should be marked on the 15. I might have done it 5 or something, but basically just after a decent looking imbalance. So I've got obviously this big push up here, so I might have gone down the time frames and got it a bit tighter. But
Yeah.
you get the idea. There's a big imbalance here.
Yeah.
But you could go down to the lower time frames and pick out the actual seconds imbalances. But all I'm after it for really is I want it to tap into this zone and show signs of a 1 minute break to the upside.
Yeah.
Right. So let's go and show that. So this is like mega patience needed for this strategy. It's
Yeah. The thing is, if you're only watching a few instruments, then you
well,
can wait. You can wait a while for this.
yeah. So I mean,
You know.
from start to finish, it's months in it. You know, obviously it first breaks the high well over here. So, but this is why I manage like 30 odd pairs. So
Yeah. 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 That's it. If you're looking at four, your trading is going to be very limited.
yeah, yeah. So from this break, because obviously breaking the 4 hour highs, there's basically the start of the move. Obviously the high's created there. So from that high being created to an entry is 86 days, nearly 87 days, so 3 months pretty much,
Yeah.
which is, if you're going to wait like nearly 3 months for one trade, like you're going to be very bored, which is why you can add 30 other pairs to your chart, so up to your watch list. Um, but yeah, we digress a little bit. So, like I
Yeah,
say,
that's good. That's important, Leo. You
yeah,
just scroll back to where you were 30 seconds ago when you were just talking that, please. Saying that, please.
yeah.
That's it. That's it. Hang on. You and George talk about this, and still blows my head. I go, what the hell are you on about?
Yeah,
It's part, but it takes a certain skill to be able to manage the expectation of that trade for so long.
yeah, yeah, yeah,
Yeah.
yeah, yeah,
Uh, I mean, it clearly works because you guys prove it works over and over again,
So,
but
yeah,
it's really hard to maintain that concentration
so
and
yeah,
focus
just
so
so when
long.
you're trading this model, then you'd
yeah,
have your 4 hour structure marked on the charts.
yeah,
I presume you just alert your 4 hours to start with.
yeah. So, I mean, I only had
Because you
me,
could be waiting a while for that alert,
yeah,
so you just you'd alert your 4 hour higher time frame point of interest,
yeah,
and then right, okay, now I need to start looking for the 15-minute structured break
yeah,
kind
yeah.
of thing
And
from there.
this is why I color coordinated everything. So when I first started doing it, I was opening the chart and like for not knowing where each currency pair was at. So let's say, obviously, this is Euro CAD. I could open Euro USD and go, I don't know what it's doing. Like,
Yeah,
is it a 4 hour? Is it the 4 hour stage? Is it at the 15-minute stage? Is it a 1 minute? Like, you don't know. So I basically decided come up with something I could open the chart, know where it's at, what phase of the trade it's at, and I wanted some at the time that was obviously practical because I wanted to know where I was at, and something that was almost psychologically beneficial to me as well. So I specifically used red, orange, and green for because it's a basically a traffic light system. So
yeah,
we go when we're green, and I only draw my green box when I'm ready to put a trade on. So green is go,
yeah,
that's trade on. So it was a bit of a psychology hack.
yeah,
Maybe. I mean, I don't know if that's gay or not, but it
yeah.
it worked. It worked anyway. It made sense to me. Yeah. So, but yeah, basically, all like it sounds really complicated. I understand structure is very difficult, but time-wise to mark all this up because I don't know. I don't normally mark these structures up. I do this so other people can see what's going on my charts to try and understand it. So that's why I've started adding them. But before I'd have just see there'd have been like an orange line across here, and once that was broken, that would mean I would then draw my orange box because I
Yeah,
wouldn't draw anything until the confirmation had been done. So if I had just say the red box here, price
yeah,
was just coming down here, I'd set an alert at the top of the red box.
yeah,
Once price was hit, I'd then come on, look on the 15-minute time frame, go to the previous high, draw an
yeah,
orange line, draw an orange line like this. Obviously, I'd spend a couple of minutes like figuring out what the actual high was,
yeah,
draw that orange line, draw an alert on that line. Once price crossed that line, so when it pops up here,
yeah.
that would be the signal for me to then go, right, that confirms drawing the orange box because we've had a break of structure. I'm expecting price to come back into it and then do a 1 minute. So, but it's the same with all boxes other than the greens. Once you get, if that was a 1 minute break high, obviously we get it here. Rather than drawing the green box and setting a alert, rather than setting a alert, it's entry. Set the order, pending order, basically.
Yeah, and you the same process for your orange box as it was for your red box. So
Yeah,
you just
orange,
drawing.
and green are all about the same, other than I'm trying to get the green entry zone tight.
Yeah,
So obviously these two I marked the low to the imbalance.
yeah,
This one I want it as close to the obviously because it's an entry and a pending. We're trying to maximize. I'm basically trying to maximize my returns out of the market. So if I drew this box and I decided that
to draw it down to there.
technically
Yeah, of
that's the
course.
low or whatever, then I'd view that as giving money back to the market that's not needed. Um, gonna have to redraw that in a minute. I'll go back. Yeah, that's me thinking that money back to the market unnecessarily because I believe it's only going to fill the imbalance and tap into the order block that creates it. So when you get down to the the minute or the seconds, depending on obviously if anyone else is doing it. If they just want to do the minute, they can do. But yeah, price has got no business going beyond the order block that creates the imbalance. So if that's say on a 15-second chart and you can see the order block nice, then it don't really need to go beyond that unless you've missed something a bit lower, which does happen. It happens regularly, but it's the most accurate sort of entry system that I've ever sort of come across.
Yeah.
It's very rare that you go off fucking hell, it's not tapped into something, and if that has occurred, then chances are it's maybe just a feed issue because obviously I use FXCM, but
Yeah.
Forex.com shows different imbalances sometimes.
Yeah, no, no, definitely. All the
So
feeds will show different imbalances, and some feeds
yeah,
tap in and some feeds won't.
yeah. Because I
But
know that gold trade that George took on,
yeah,
was it Thursday or Friday?
yeah,
Like on the TVC feed,
wasn't there?
that showed
No,
nothing. So
no, I had to jump on to, so I had a look at it over the weekend, and I was on TVC and I couldn't see anything. But then I switched to IC Markets feed,
yeah,
and
yeah,
I could see the candle clearly.
yeah. So yeah, it's if it looks like it tapped into nothing, I'd put it down to a difference in feed because I bet it's on one of the feeds. So but yeah, again, so once it taps into the orange box, it will fill and it made there'll be an imbalance in there on the seconds, I'm sure. And then we just want to see a break to the upside. So basically, at this point, obviously, 15 minutes turn, showing signs of back to bullish. It comes mitigate something, and then it shows signs of the 1 minute turning bullish. So at this point here, where it breaks that 1 minute high, then
Yeah,
that's all for. This is the lowest. Like obviously, this is showing that that's possibly the lowest point in the market, as all three timeframes have aligned and basically said we're showing signs of bullish, and then from there, like I say, it's picking a zone and an
yeah,
entry, and then obviously, like I say, you would anticipate a new 4 hour high at that point. So obviously, the new high would be up here. You could extend it further because obviously we've now had a couple of swings. It just depends how brave you are and what's to the left as to whether you would consider holding it any further. But yeah, you need to check that. But yeah, the idea of it is, I would always say, like, if you get it right, the next 4 hour high
it's your target.
is your target basically. Yeah, I mean you could set it just under as well because
Yeah.
it's this, like, just below it would be your safest bet.
Yeah, because as
Just
it gets to that 4 hour high, it starts playing
yeah,
silly buggers,
yeah. Well, yeah. I mean,
and it
I
can.
think it smashes through on this occasion, but there's nothing to say
Yeah,
that it don't mitigate that and then turn bearish anyway. So just below the high would be a safe bet. Above the high is the actual overall target if you're right.
yeah.
So yeah, so that's sort of like the basics of structure and me 4-15-1 system. So, but like I don't particularly trade that way so much these days. I've started to mark them back up again because I do love this. It's such a good.
It's good for getting the really big trades.
Yeah, yeah. But like I say, is what I do now is I'll try and take trades from all of the 15-minute swings. It just
So you follow the same concept, but you're 15
yeah,
minute
yeah,
swing,
yeah.
and then you're looking for the 1 minute
The
break
1 minute
after
break.
mitigating the bottom of
Yeah,
a for in a bullish scenario.
yeah,
Your 15 minute point of interest gets mitigated,
yeah,
then you're waiting for the 1 minute to switch to bearish. Same scenario.
yeah. Yeah, so all these 15-minute swings I've got marked. Like I would try and take a trade from all the possible new lows that have formed because generally, not always, but a lot of the time, we get some form of break. Like even on this occasion, where it's just taken this 15-minute high here, we get a higher low, higher high. We get a break, so there'll be a break under here, pops up to mitigate something in one of these two. Obviously, it'd be this one. This mitigates an imbalance in here. So you could possibly get there's possibly a sell from that sort of area there. Like I say, because we get the 1 minute break. What's the thing? There's a possibly 1 minute break under there. Like I say, because this is the 15. I know I'm on the 2 hour, but it's so I can fit more candles in. But as the sort of structure for it goes, is I've already got that marked sort of. So structure there, there. I'll turn this darker in a minute so you can definitely see. Oh, maybe you can get a couple of downswings there. Get the gist anyway.
So would you still take a sell,
Yes,
even
yeah,
though you're in the 4 hour bullish range, but the
yes.
15 minutes gone bearish, then the 1 minutes give you bearish confirmation. You take that to like a 15-minute swing.
Yeah, so obviously it helps if you have like the bigger, better moves marked. So if I had these both zones marked and I'd seen this, obviously there's trend line liquidity here as well. So we sweep liquidity. Obviously you add liquidity into it as well.
Yeah,
So this sweep here
yeah,
is obviously it's a really good sweep because it takes the 15-minute high that I've got marked. So this is a major external liquidity high,
yeah,
obviously on the 15, and it takes trendline liquidity and then shows sign of a break underneath. So obviously if I'd have caught something, say, from this zone, but I'd be fully aware that the 4 hour
yeah,
is majorly bullish and we had just turned 15-minute bullish. And this is why I said the uh, not taking the obviously I said taking the high was a target on here would be I don't think it's going to take the low because we have turned 15-minute bullish. So on this occasion, I mean, if that's the entry or this is the entry, it could be either because I would say anything to the left of where my cursor is would have been a possible entry.
yeah.
So if it had been, say, that, let me just turn that no extend and turn it green. Let's say if that was the entry here,
Yeah,
so this candle here would have say possibly wicked you in. The target for that trade would have always been to that box, the orange box, because you're expecting the trade to reverse from that point, So at that point, you're just waiting. I think it's going to turn around from here,
yeah,
there. If that's the box you go, well, I don't think I wouldn't advise going beyond the open of this box because, like I say, we've turned 15-minute bullish at that point. So this, I'd really be expecting a reaction from that zone. So to go beyond that is just dangerous. So my TP would just be about there, something like that. I'd maybe stretch it a little bit. Um, there is obviously you could be a bit cheeky. I wouldn't necessarily advise it. Like I say, I would generally just stick it at that box if I had this marked, thinking, yeah, it's going to buy from there. Obviously, I'd wait for confirmations. But yeah, depending on where your 1 minute break is, where your 1 minute structure high is as well, could determine whether. So I'm going to try and weigh this right. So this is your 1 minute high from this box. So if you was in that sell, I would advise just taking it as soon as it taps near that box. But sometimes and quite often, it might break the 1 minute structure and not take you out where you got in here.
yeah,
And because it's then broken from this buy setup, it's broken to 1 minute upside. If it didn't take you out, you could then set your TP at the point that entry would hit, if that makes sense. I know it takes you out on this occasion, but let's say that was your entry just for whatever. Obviously, it'd bring you back into drawdown and break even. But if you was in that trade here, and then obviously it showed signs of 1 minute break to the upside, but you stayed in, and you knew that you was set a pending on here, that would be then the point that you would get out. So I definitely recommend the first touch in the orange zone, but if you're high enough in this zone as the sell and you're in it, and you then you often get a confirmation that it's going to reverse before it retraces for the entry of the confirmation you've just had, if that makes any sense.
Yeah, I know exactly what you mean. Yeah.
Because basically, how it's not always the case, but once you get a break in the direction of a what I would consider to be external liquidity on whatever time frame. So 1 minute external liquidity is going to be internal on say the 15, and the 15 is going to be internal on the 4 hour, but it's still the external swing points on the relevant time frames are still, once they get broken, I'm of the belief that we very much likely will get a pullback into whatever caused it. So we could use that for our benefit depending on where we get in. But like I say, it's a bit more dangerous. It would if it was tight on that and this one was the entry, then you would have got taken back out. But if the entry was higher and this wick's what actually taps in that entry zone. Obviously, I haven't got it marked, so I don't know.
Yeah.
Um, let's say if that was your entry, then because you'd had the break above from this one, so you'd not be in, you won't get in till that point there. At that point, you would say, well, where's the buy set up? And it's there. So you'd set your entry just above that, basically.
Yeah.
So, but that's like just from the fact that once we break a high on the relevant time frame, we can then use that as to our benefit, basically. I'll delete that anyway because. But yeah, that's the basics of the 415 and 1, and how I'm trading now. Like I say, is it's all the same confirmations. I'm still waiting for a 15-minute break. I'm still using imbalance, obviously with the addition of trend lines and liquidity sweeps into zones, and I'm still always aware of where I am in the higher time frame.
Are you three touch short trend lines?
Yes, mate. Yeah,
Yep.
minimum three,
And
and
do they have to exactly touch, or is there? Because I've noticed on some like charts stuff marking things up,
yeah,
like it's like, oh, wow, I don't know, I'm not measuring pips, but I've
yeah,
noticed it's like millimeters away from touching, but it's
yeah,
not actually touch. So I'm like, well, does that count? Because I
yeah,
suppose if you flick through different feeds, you might find different
yeah, yeah,
touches,
yeah.
you know.
Yeah, well, we actually discussed this last week. I think I think it was gold. Um, I had I had some at Matt. I had what I thought was a trend line, but it wasn't actually what I would consider a trend line on mine because it wasn't clean enough. But George said on his it was perfect. So
Feed differences, yeah.
yeah, I think it was this one here.
And that's the problem. We're always going to get that, aren't
Was it
we?
that one? I know, miles away. Yeah. So yeah, it's like I say, the feed difference, mate, is what will be determined. But I mean, if you're unsure, it's always worth going and checking another feed. So,
You know what though, as kind of a beginner who started this, once you start developing an eye for it, it's
yeah,
amazing how many spot on ones there
yeah,
are.
yeah, yeah,
All
completely
of a
agree.
sudden, you think it's never going to be possible that you're going to get it bang on, and
Yeah,
then there is one.
yeah,
So they're worth, digging for.
yeah. No, I completely agree, mate. Was it this one that the trend line was on? Might be your
Well, I'm
GBP.
glad you said. I'm glad you said about this 15-minute thing, rather like you thought like, you're taking it from these swings because um, I don't trade 451 exactly, but I do
Yeah,
like outside of my gold strategy, I do um, 15-minute structure
yeah, yeah,
breaks and get in on lower time. I look for lower time frame entries, um, but yeah, like I'm not always like your initial, like you're saying, your first 451 rules, you're literally going for that swing
yeah,
low
yeah, yeah,
effectively. But now you're saying that you do actually buy off the swing lows in between the 4 hour swings.
yeah, yeah, yeah. But like,
Yeah.
that's only
I've been
because
I've been marking a few things up to be fair, like
yeah,
just just randomly going over charts like DAX. I had a great one on DAX. Don't even know. The
Yeah.
other day I marked something up on DAX and I was like, it sounds quite sad, but I was proper jumped. I was like, fucking hell, I nailed that. When you click through and you're like, oh, I got it bang on there.
Yeah, yeah,
And
yeah,
then, and then I look at it and think, because when you back test it and then you look at it and you think, why didn't I see that? That was an
yeah.
amazing trade. Like,
Yeah,
it's gone by one to 80 in 3 days. And I'm
yeah.
like,
Yeah,
it just wasn't obvious to me whilst it was live.
yeah,
But
yeah,
after it's played out and you see the
yeah,
structure
yeah,
and then you
yeah,
start looking into the structure
yeah.
and then you cut back your time to like, I don't know, the day before and start marking it all up.
Hmm.
And then you realise you mark it all. You get it bang on. You're like, fucking hell.
Yeah. So I think it was DAX that we looked at quite in depth last week. So obviously, as I was saying earlier, after any sort of like external liquidity break, so obviously I've got a 15-minute structure mark here. So 15-minute low, because obviously we get a rally
Yeah.
from that point, create a high. Also takes a 4 hour high. Um, so break below here, and then I say as it always obviously it comes and taps into a zone because obviously all this price action here would have been live up until this high was made. Obviously, we don't know that it's definitely going to reverse from there. We've obviously in a live situation we would have said maybe it's coming higher, but we've had a 15-minute break, so
Yeah.
from there, so that's the 15-minute break there. Price comes back. If we can get a 1 minute break somewhere in here, possibly that one there, possibly there. I think we discussed it last week.
I think the thing is with DAX and indices, we know they're going to switch bullish
Yeah,
eventually.
yeah,
So
yeah,
when they're on pullbacks, like DAX is on quite, I mean, for DAX anyway,
yeah,
it's pulled back quite a bit. I don't know how much deeper it wants to go, like, but
yeah, yeah,
there's
yeah,
going to be a point where you can have an opportunity to catch a crazy trade.
yeah, yeah. Oh, 100%. So again, what we was because George was on last week as well. So he's got obviously a 4:15 set up marked here. So this order block in here takes this 4 hour high. So it's a good area to basically hold the market, if you like. Obviously, price comes in, it's broken multiple highs, so it's broken a major high, it's broken an internal 15-minute high, cleared off, done its thing. It's now turned slightly bearish, but
Yeah,
we are still 4 hour bullish.
yeah,
So George and myself believe that this might come a touch lower
yeah,
over the next couple of weeks or whenever, might be
yeah,
months, I guess, but we think it's going to hit this orange box in here
yeah.
and then basically if it comes somewhere in here and gives a good 1 minute break to the upside,
Looking
there
for
is
it.
a real good possibility that we are then. I mean, I'll just dull that down because that's fucking dead bright now. So yeah, if price does come down to here, I've got this orange structure here marked as my 4 hour. That's just that was a guess. So obviously right up until there, it pulls back. I thought it might take the high. I didn't know, but obviously since then I've gone, well, it has broken the 15-minute. We could get a couple of 15-minute bearish swings.
Yeah,
But now that this hasn't taken the high, what I would do from here is this 4 hour low just needs moving along there
yeah.
because the high still hasn't been taken and the low still hasn't been taken. So
Course, yeah.
however low this comes, I'll just drag this 4 hour low across. I mean, if it takes it, it becomes a
Until
new.
it takes the high or the low,
Yeah, until it
and then
takes
drag it
higher
to the point
low.
of the
Yeah, I'll
when
just drag that.
a new low is created within your 4 hour range, you're just moving
Yeah,
it across until it takes it.
yeah. So
Yeah,
basically, until this comes and then takes a higher low, that's the 4 hour structure. But inside of that, we will see obviously, obviously we've had the 15-minute break to the upside. We're now 15-minute bearish, but we are still overall, like I say, because obviously it's not happening. Like I said earlier, we might get 4 or 5 swings on the 15-minute. If we're 4 hour bullish, which we are, we might get say five swings on the 15-minute, but we might get 2 or 3 on the pullback. So that's one swing, two looking at 2 swings, possibly now wherever it finishes. We might obviously create a new high and then a new low again, but that remains to be seen.
yeah,
But basically, as a we would generally expect more swings in the overall higher time frame direction. So, like I say, there's 3 or 4 in this. If we get 2 or 3 in the pullback, then we might get 5 swings in of the 15-minute bullish structure to make it obviously a new 4-hour high. And then obviously inside the 15, we get like 1 minute changes. So because the 4 and the 15 have already broken their relative structures, like I say, if we do come down into this orange zone somewhere, there'll be some imbalances in here. I might even have some marked. But like I say, if it comes down, fills one of these major imbalances, breaks to the upside, because the one will change first before then the 15-minute changes first, and then that will keep the 4-hour bullish as well. So obviously, if it does come down there, I would anticipate that. Let's say this just continues down now, and that's what we actually get as a 15-minute structure. We can then, I would expect let me draw what I'm expecting from here. So just this is a structure here. So it's made a low, a high. I'd want it to make a low, break to the upside, break above this,
Yep.
come back, mitigate, and then we would basically 1 minute change. We would basically 1 minute start making structures up, which would then mean that the structure will look like this. So it would get a bit ass twitchy around this sort of high, but I would eventually expect it to break the high. Once it breaks that 15-minute high, we're going to get a big pullback again. And then we've got a couple of swings there that would be on the 15-minute now that it's orange. But like I say, this green zigzag basically makes up the orange zigzag, but obviously it's just a bigger structure, and obviously the orange zigzag would make up the 4-hour structure. But that's what I'm trying to show you is like, although there's an orange and a red line going up here, it's the same structure. So it's the same price action as such because it is what it is, but there's different structures running on different time frames, and obviously if the 4 hours one direction after a pullback, like I say, if you can then start getting the 1 minute, you see at this point here, if this plays out how that's drawn, like I say, the 1 minute will turn bullish, the 15 minutes bullish because obviously the 4 hours bullish because it hasn't taken the high or the low, and it's making higher highs, higher lows. 15 minutes bearish at the minute, but it is overall.
But could have just took some liquidity.
Yeah. So the 15 minutes bearish, but the 1 minute changes bullish first. So if this plays out and we get an entry here, if we get an entry there, technically the 4 hours bullish, 15 minutes bearish, 1 minute bullish. So, and then at this point here, so if that zigzags up, takes the 15-minute high, there's possibly another entry from in here, which would then mean that the 15 minutes bullish again.
Yep. And at that point of that low there, you wait for the 1 minute to switch.
1 minute to change bullish again
Then
because
you're
it will
looking
be
for the
bearish.
move that created that.
Yeah.
Yeah, I get it.
So this one here would be like the major safest move because you've had that 15-minute break to the upside again. So you can get multiple entries on the same sort of swings, if that makes sense.
Yeah.
But I would just say like this one's slightly more aggressive, a little bit more risky at times. But like I say, we have had the 15-minute change to the upside, so it depends how you view structure, I guess. But yeah, there'll be like an entry here. There'll be an entry after it takes this high, it'll pull back, and then it'll go off and do its thing until you decide fucking hell, once it's taken these overall highs by quite a bit, you'd be then thinking, do you know what? The 4-hour might start to pull back. We haven't got enough data because it's all-time highs.
Yeah.
So you're sort of guessing, yeah, it's all-time highs anyway, or would be. But you would then, if you was thinking about sells, I would then be saying, well, you don't really want to be touching anything major until obviously you draw your structure out. If it was then doing that, you would then be waiting for a 15-minute break. So if price does this, You would then wait for this low to be taken before considering sells, and then that would give you a 4 hour pullback, and then you might continue long again. But knowing where you are in the like in the multiple time frames will basically tells me whether I think I should hold or not. Obviously, sometimes you get it wrong. Sometimes you never actually know if it's like if we get this one here, we don't know if it's actually going to hold. You know, this might give an entry. It might turn 1 minute bullish, could mitigate something in here, and then turn around and continue low because it could. Obviously, because we are still currently 15-minute bearish, it could come up into
Yeah.
like this blue and then continue its 15-minute down. But it's with what we know structure wise, there's a very good chance that it's going to make a new 4 hour high from this point.
That's my biggest thing is I do catch some trades, but because I don't really hold trades overnight,
Yeah,
I don't really get the maximum because I've caught some really good moves, and
yeah,
I'm like, and then like 2 or 3 days later, I'm like, if I just held that,
yeah,
would have had, I would have had so much more out of it. But
yeah.
you know, it's just the way I've always been. Like, I don't really like holding trades for too long.
No, no.
I do need to. I'm probably gonna do like I probably just start looking at doing some of these like swing trade positions, so to
Yeah,
speak, and just low risk and just letting them run.
yeah, yeah, yeah. Well, I mean,
Um,
I'm a big believer that structure is king. Like,
yeah,
I know obviously you're just looking for little reactions, and obviously you're absolutely smashing it, which is obviously double amazing. But
oh totally.
I genuinely think, mate, if you added structure, like proper structure to your trading, then
Yeah,
it
yeah,
would definitely add. Because I don't think it would ever take anything away from you. Because
yeah,
like it's just if you're aiming for one to twos, then like you could maybe just go, well, do you know what? I'm going to take 1.5 out and leave half to run because I think we are in a good place for maybe say the bottom of the market or whatever if you're in a buy,
yeah, yeah.
and that and
Yeah,
that and that half that you leave running. So I'll go back to Euro CAD.
I think that's I think that happens too. Like sometimes Tom's stuff and the simple strategy stuff happens to get an entry kind of the same place. You'd maybe get one lead,
Yeah, yeah,
but
yeah,
then they close it and because they don't know to hold it.
yeah. Well, I mean,
Yeah,
even if they like this is obviously this one that I went over first with Euro CAD. Like someone might not have got in here. Someone might get in here, like off this little wick down here or something. But if you know the rest of it,
yeah,
you could then go fucking hell. Like Lee don't
yeah.
believe
I
that the
mean,
market's coming
I'm
lower
not.
than here. There's no imbalance below. There's no liquidity that makes me think it's coming lower.
Yeah,
And then you just go
you're on the
fucking hell.
train. Yeah, you're on the
Yeah,
train. So hold it instead
yeah.
of closing it at
We've
one or
turned
two
we've
or
made a
three.
new 15-minute high
Yeah,
and a 4 hour bearish bullish structure. Like if you got in here because that's what SS1 gives you or whatever, do you know, like it's worth a punt surely. But you can only know that that's worth a punt if you know
Structure.
this.
Yeah,
Yeah,
yeah.
and like I mean I've got stuff marked. Obviously I've briefly marked and spoke about this liquidity here. But if that wasn't there. It don't matter because I've still go fucking hell, we're turned bullish still. I'm still expecting it to come down, mitigate something. I can delete that trend line. It don't matter because all I'm looking for is I've turned bullish. It's mitigated an order block. It's filled an imbalance. Like so, you can take liquidity out of it. I don't recommend it because it does help. Helps you spot things and obviously if you'd have caught this, one of the things I would recommend is that I mean, I always recommend to try and find reasons not to get in a trade. If I had that entry on, one of the first things I'd do is I'd try and find a reason not to actually get in. And I'd be going, is there a trend line? Like, because if that was liquidity, it's not good enough for me. I don't like it. It's not what I'd count because it gets wicked there. But if it was a trend line, I'd definitely be thinking, oh, didn't want to do that. I'd be thinking, well, price might actually want to come and take that out. So is there an entry lower than this?
she's very precise with your trend lines.
Yeah, yeah, very much so, mate. Yeah, yeah. Like I say, that's I wouldn't
Very, very important.
I wouldn't accept that.
Yeah, because some people might look at that and think, well, that's still a trend line
Yeah,
because it's so close.
yeah, yeah. No, it's I definitely want to accept it.
Yeah.
I am very peculiar, but again, that's another. I mean, it works for me. It's just I used to be a bit accepting of like not perfect, but I mean, if we think that all this is done by a computer, then why would we think it's not perfect? Any computer can draw a straight line,
Yeah.
you know, and the trend lines that we want to work off, if depending on what theory you believe, like we want we I teach you guys or whoever that this is the banks building up traps. So if their trap was really fucking sloppy, you know,
Yeah.
it's just not right, is it? Like if that wick was because we're trying to convince just
I was watching an interview earlier with a guy who is he was one of the top hedge fund traders in America.
yeah,
He did 20 consecutive years, profitable years
yeah,
without losing. Not without losing any trade, I mean year on year.
yeah, yeah,
And he was managing billions.
yeah, yeah,
He said that his theory is the market is built on algorithms,
yep,
and he said the market makers know where price is going to end at the end of the day before
yep,
the day starts. He goes, the people who move the market and want to move the market,
yeah,
they know
yeah,
where price will end up. He goes, and I can tell you
yeah,
now, they know
yep,
before the day's over where they're going to close at the end of the day.
yeah, yeah, yeah,
And I was
yeah,
like, pretty interesting theory, to be fair.
yeah. Well, like so obviously with because they know what they're trying to do. So obviously we spoke early on about obviously imbalance, but that was we was basically talking about buyers versus sellers.
Yep,
So if the banks want to move price higher,
yep,
like they need the sell orders. So like and that's what they generate here. So if that wick was down here and this or even if it was less, do you know. Oh, didn't want that one.
yep,
If that wick was there, they need to make this obvious enough that people are gonna try and get in the market. And so if that wick's not tidy, like your average Joe's just going to go, oh no, that's fucking miles out. That's definitely not liquidity. Do you know, it needs to be obvious enough. So it's got to be good for it to be obvious.
yep,
You know, and also for me, it takes away the guesswork. So if that's three bang on touches, I'm not going, oh, is it in it? I'm going, it definitely is because it's three perfect
yeah,
touches, you know, so it takes a lot of the guesswork out for me as well. And this obviously that then leads on to Malcolm's question. He asked about George said something about crowbarring in
yeah,
confirmations.
yep,
So and that like obviously it's what George says, so I can't speak for George and what he meant by that because I don't crowbar in confirmations because I built this around everything being bang on pretty much. You know, it either is or it isn't. I don't question whether that's a trend line because it's three perfect touches. If it was a little bit beyond, maybe if I was to then think, oh, it's close but not quite, and then I went, oh, I'll take a trade off it, then I would consider that crowbarring something in. So I built a system based on no ifs and buts. The only questionable part of my strategy, even how I trade now, is when it comes to an entry, there might be three or four imbalances in here that it might go
yeah.
for. So that's the
It,
only questionable thing I consider in my trading. Obviously, structure wise, we get some questionable breaks to the upside or what we would consider a structure, but you know, it's I mean, if everything was perfect, then obviously it would be easy, and I'm sure computers and AI would figure out all of the market because obviously I'm just some random guy from Grimsby. You know, there'll be some supercomputer that could figure this out if I can figure this out. You know,
yeah,
so yes, there's questionable structure breaks
Yeah,
sometimes, but
yeah.
but that's why I've made rules around what what I would consider structure swings. So
Mhm.
um obviously, I mean, I'm probably going to struggle to find some.
And you class wicks as a structure break. Doesn't have to be a body
Yes,
closure.
yeah,
It's a wick.
I do now. So
Yeah.
I used to only consider body closes above. So
Yeah. But the problem is you jump down to the lower time frames and there will be a solid candle there, won't there? So
yeah, so before I would have set my alert and thing at that line.
yeah.
Obviously, I always preferred it if it took the wick high and body closed above that as well, as it was like a bit of a bonus if it body closed above that wick high. But I would have, when I was doing when I first started the 415 one, I would have considered this body close there above that orange line as good enough.
Yeah.
But yeah, it's the way I view it is that that could have took stop losses, so it's relevant because its price was there, so it happened. There's no denying it happened
Yeah. Yeah.
because,
Yeah.
so I
Yeah.
just go to the wick highs now, and
Mhm.
yeah, because I like say if on the 15 minute it might break, but on the 5 minute it might not have body closed above. But if it
But on
just
the 1 minute, it definitely would
yeah,
have. Yeah.
so yeah, it just depends. Like I consider that it went above it, so it happened, so it counts
Yeah. So
because it could take people's money. So yeah,
yeah, I suppose it's just that last part really, isn't it? That the lower time frame second stuff,
yeah,
inputting those imbalances that's I think throws people. I mean, George did an example of his gold the other day, and when I looked at it, I seen
yeah,
that huge 1 second balance, and I was just like, I would never have picked the balance that you picked.
no, yeah,
Not in a
yeah,
million years. I was like, because that 1 second balance below it just looked like it
yeah, yeah,
was wanted to be taken. It still could be. I
yeah.
don't know.
Well, I mean, we can go. It's not on this feed, so I can't. I was watching that area. Like we've had a 1 minute break to the upside now, anyway. So I'm expecting it to pull back in the week and
Yeah,
you know maybe tap in something for an entry. But like I said, it didn't show anything on my feed, so I didn't really have it
no, it
marked.
didn't.
I just had that zone marked because that's what led to this high being taken. Um,
Yeah,
let's get to the seconds.
great trade though.
Oh yeah, fantastic. And I mean, yeah, like I say, I
I
think
think
he's
it
going
was
to pull
one.
back. So if he's still in it, he's maybe got a bit of pain coming over the next couple of days of pullback. But yeah,
I think it is.
that lowest imbalance lowest imbalance that he's got marked is. I'll check see if it's got anything on mine on the one.
It hasn't, mate. You can't see it.
Yeah, the only giveaway is the size of this candle.
Yeah, you switched the wicks off, don't you?
Well, I don't really these days no
No.
more, but it does sort of help sometimes. But yeah, look at that. But
But that's that. Yes, that's the candle that it came back for, is it, on your feed?
yeah, this one here, so the size on that.
I think his entry was on the next one, slightly just to the right there. Yeah.
Yeah, so yeah, that's what I mean. So his entry
Yeah.
was, you
Yeah,
see,
there, yeah, that's
yeah,
right.
his entry was there, and that's
Yeah,
why I put it in the supply chat. I thought, what would make you choose that particular
yeah.
candle over that big imbalance below?
Well, I
Because
think this.
my entry would have been on that candle for
Mm.
sure,
Yeah.
and I would it wouldn't have tapped me in.
Well, I think
And I'm still not really clear why George picked the
that
entry he
one.
did. I did read
Yeah,
that stuff and went through the
yeah,
Yeah,
same thought
like
process.
yeah, he just said that Price had tried to tap it twice but failed.
Yeah.
It
yeah,
felt like it was a strong chance of it mitigating that one.
yeah.
I just,
So,
and like I say, I mean, you're on very low time frames there anyway, so you could afford to cover them both
yeah, yeah,
realistically, and you'd
yeah,
still, and I measured it, it's still only like $1 or 10 pips, we want to call it. It was still a
yeah,
super tight stop loss.
yeah,
But I think his was marked up at like 0 point something anyway, and I was like, Jesus
yeah.
Christ, I
So
just,
obviously, I can't speak for George, but
yeah,
what I would. what I would say is there's no candle here, no down candle.
Yep.
So as far as we're concerned, that's nothing happened as such.
Yep.
And then we've got a decent enough looking down candle here. So we have, if you went for here, it'll be because there's some form of BPR there, balance price range or just imbalance. Obviously, BPR is normal imbalance as well if you just do it there. But
Yeah.
that might have been why he was
A
thinking,
very brave entry though, isn't it?
oh, 100%. Yeah, yeah, yeah.
With that looming below it, it's a very brave
Yeah. Well,
place. Not to cover that as well is that's and I wasn't questioning is I was just curious why he didn't. That's what I said. How come he didn't cover that imbalance below? Like, yeah, I just couldn't get my head around that. Like,
yeah.
obviously,
Well,
George is fucking amazing at trading. It was brilliant. Like,
yeah. Well, what I think is because I don't think I'm not sure he sets like a. I mean, he'll have to correct me on this. I'm probably going to spout some shit here, to be fair, but I don't think he always sets like a limit as such as he doesn't watch it. I think he watches it when it comes in, and he's got a. He'll draw like a line where he will cut the trade if price goes to it, sort of thing.
right,
So
okay,
I think he's putting his order on where he wants to, and then, like I say, if that little box there was the amount he wanted to fill, and he decided his entry zone was actually say that, but then he'll just be beyond that. He'll have like say a line below that where he goes, that's where I'm definitely dropping out because
yeah,
he likes to get in while he's. I think he market executes basically and pulls a trade when he's touches his line,
yeah,
you know. So, but like I'm not 100% on that. It's
yeah,
just
yeah,
what I believe because if you actually look at his charts, he calls it a tap out line, which is his stop loss where his stop loss would generally be, I guess. But because I remember when uh he caught he actually it was US 30, I think, and he caught I think it was like a 210R or
an
something mental
absolute
like that.
fucking banger, wasn't it? I was,
Yeah,
yeah, I remember.
because he marked that, like I say, he had that marked as a 200 odd fold trade, whereas I had it marked as what did I have it marked as? Mine wasn't anywhere near as tight as his was. The hell was it? This here, I think. So yeah, I think because of how he's getting in, it's his risk to reward mega. Yeah, I had it 150, I think, because obviously I've picked an order block, added spreads, whereas George has got in at his point and I think because of how he's getting in, like his risk to reward increases on top of that. So obviously you'd have got an extra 60 fold
Yeah,
on that compared to what I would have had marked. So yeah, I mean you'd have to ask him anyway. I'm not,
yeah, yeah, yeah.
like I said, I can't speak for him because I don't know, but
Nice trade them, and they, Jesus,
yeah, he's
1 to 200, fucking hell.
yeah.
Wouldn't mind eating a few of them, would you?
You don't need many of them, and you can take a few losses as well.
I
Yeah.
tell you what, flipping heck,
Well,
if you've got 300-400 quid risk on
Yeah,
those, you're fucking talking silly money.
yeah,
you got a bit in the bank to make mistakes with as
yeah.
well, haven't you?
It's funny actually because I messaged him not last week, the week before, I think it was. He'd won a trade and it was a decent winner anyway. I think it was like 50 odd fold or something it must have been.
Nice.
Um and I'd said something to him and basically said that absolute banger, mate, well done, something along them lines, and I can't remember, but then he said, oh, he needed it to recover all his no, to free up leverage for his.
Leverage,
Yeah,
yeah.
he put it on the thing. He said to free up margin for his losses.
Yeah, and so I
And I go,
messaged him
what
going,
losses?
well, that's what made me message him. I was like, "Is everything all right, mate?" Because like the last three trades you've posted, like you had like a 210 win, 210 fold win, a 50R, and I'm sure there was like a 24 in there or something. And I says, and he did post another loss, and then obviously that the one that he won as he'd posted that, and I was like, so in theory, mate, you should have like 300 losses under your belt before you break even, do you know? And he was like, oh, no, I was just joking. I was like, thank fuck for that. Do you know? Yeah, but yeah, I actually messaged him because I was like,
It's very
shit.
dry.
300
I read that.
losses.
Yeah,
I
do you
was
know?
I was trying to work it out. I was
No,
going,
because
how
do
is
you know
that
what?
possible, George?
I
How is
actually
that
thought,
possible?
because he said it was a leverage issue,
Yeah,
I thought, so do you know when you go into like, obviously you go to drawdown, if
yeah,
you've got loads of trades when you go to drawdown, it uses all your leverage up.
yeah,
I was
yeah.
thinking, fuck me, he's only got super slight top losses. He can't be going into drawdown. There is no room for drawdown.
Yeah, but yeah, I messaged him. I was like, "Are you okay, mate?" And he was like, "Yeah, yeah." I was joking. I was like, "Oh, mate, fucking, I've been panicking." And he doesn't
Yeah, I
reply.
didn't.
He replies like hours or days later as well. I was like, "Fucking hell, mate, I've been stressing." Do you know, thinking that he's been over leveraging on his losers or something? Do you know?
Just took his stop loss, I was hoping, waiting for it to turn round.
Yeah. What's the stop loss anyway? He's gay. But yeah, that was funny. It made me laugh. That shit, like I said, I shit my pants for him. But right, is there any questions, guys? Because if not, I'll call it there anyway.
No, mate, that's pretty good.
No, thank you.
I've learned something today, mate.
Oh, sweet. What have you learned?
I've learned that you take from the swings on the 15 minutes.
Yeah, yeah,
It's
yeah,
made me happy.
yeah. Well, they're important, mate. You know,
They're
it's
right, yeah.
yeah. I mean, in reality, mate, I'll take swings from 1 minute if it's in the right place. You know, it's yeah, it's just bang
Yeah,
on in it.
yeah, yeah. Good. It's a good lesson for structure, mate. I think
Yeah,
it's a great one.
yeah. Well, I mean, if there's I've got loads of videos in previous lives, mate, where I actually cover rules and everything. So, um, yeah, I mean, if you actually want to learn it, obviously I need to do the education videos as well, which I'll crack on with this week. I say it every week, but I actually will. So, but yeah, I'll call it there anyway, lads, and I'll
Yeah, all right,
speak
mate.
to
See
you
you
all in
later.
the week. All right.
Thank you,
See you in
Lee.
a bit.
Thank
Bye,
Cheers,
you.
bye.
mate.
Cheers.
See you guys.